In today's video, we're going to discuss how Bitcoin has potentially started to decouple from the Nasdaq and trading with stocks. Remember, this is something I brought Jack Mallard on the channel talking about before, and he's also going to be kicking off this next segment. I mentioned this in a previous video about his new company. So now he's got two companies. One is 21 and the other is Strike. And we'll be diving into how this is changing the game for Bitcoin accumulation, like bridging the gap between the traditional TradFi world and Bitcoin. This is insane, and this is huge. So stay tuned.
Chasing altcoins feels like throwing darts blindfolded. Every loss hurts and every win is fleeting. Stop the cycle. Bitcoin is the safest bet in crypto, and Drip2 BTC makes it even better with high-yield wallets and discounts. Buy Bitcoin, deposit, and earn while you sleep. It's time to build wealth you can count on.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Profitably, where we don't trust, we verify, and operate with integrity and transparency. So we're gonna jump into this yeah, that's what the stock market did. Jump into this clip about the Nasdaq decoupling. Now, TLDR and some additional information I found on this is that this has happened before historically. I don't have the chart up right now, but there is times when Bitcoin has decoupled from Nasdaq, where it's traded as opposite to whatever the Nasdaq is doing. So it's become a good hedge against stocks. And that has happened different times throughout Bitcoin's history. But as Jack mentioned in a previous clip, he believes that this cycle is where we will start to see that continue to diverge and they won't trade synonymously anymore in the future. And I'm kind of leaning in that camp as well, especially now that we're looking at global adoption. So the Nasdaq is super big, of course, in regards to US money and capital. And then, of course, there are foreign investors that can invest in that as well. But recently, with the regulations and different things that the Trump administration has put in place, that has caused a lot of those people to get out of the US stock market. So as long as this continues to play out, those people need to put their capital elsewhere. And that's why we've seen gold start to rally and the Nasdaq stock market, S&P 500, kind of drop. So gold and Bitcoin become that kind of safe haven. It's like, well, where else, especially if you're in a foreign country, where else are you going to put your money? And you can't put it back into the local economy or into the currency, because in order for you to continue to export goods as a foreign country, you have to have cheap labor and a weaker currency, basically. And that allows you to export your goods and services to other countries. So they have to put it somewhere where it can accumulate, but not have a negative or adverse effect on their country. So let's jump into this clip about the decoupling on CNBC.
Not a lot of green on the screen today, as you know. However, you probably didn't look at Bitcoin. Today McKeel did, and she's here. It's up 3%. What do you make of the way that this has been trading? It's decoupled, obviously, from the Nasdaq, which was a trend for a while. How do you see it?
Something that people were looking for all month, because if you go back to earlier this month, it really was trading in line with stocks. It just was not seeing the big, pops and drops that one, we're used to seeing out of Bitcoin. And two, it is outperforming the S&P. It has not really caught up with gold, the, leading safe haven. But I think you are seeing evidence, not just, I think that the obvious and easy narrative would be that we're talking about Fed independence today. So Bitcoin is kind of acting as that hedge against, political uncertainty. But I also think that it's not just enthusiasm, it's also exhaustion. You're seeing investors wanting to, get back into risk, but just maybe not the type of risk that's tied to earnings or Fed policy.
You got a quick thought?
I do. Look, you've got a president who's very interested, and his family's very interested in Bitcoin doing well, crypto doing well, and I think you're close to regulation or some positive announcements on policy, and that's what's driving it.
It's evidence, Bitcoin's supportive nature is evidence that we have not had a deleveraging event. If we could have a deleveraging event, everything's going down.
Well, it has underperformed the S&P and Nasdaq overall since the peak. Recently, though, to your point, it is trading pretty well up from 82 just a week and a half or 2 weeks.
Real quick, last thought?
I think one of the hardest things for investors is to wrap their heads around the fact that day to day it does trade like a risk asset, but medium long term it trades like a safe haven. If you look at gold's outperformance, that kind of can act as an indicator of where Bitcoin heads when the dust kind of settles.
So that is interesting. So there's still some naysayers on the other side. I have no idea if we're going to see a deleveraging event. Everybody thinks that Michael Saylor is the one that's going to be leveraged or liquidated. I showed you guys a clip on that and how he's actually built leverage on top of Bitcoin, and that is little to no risk. Typically, every cycle in all markets, there's always some kind of blow up though, but I don't think we're going to see it right now. Like there will be something that causes the bear market or when we get into the bear market, the natural cycle, then there's someone that just will blow up with leverage, of course, find out that they were using paper Bitcoin or whatever the case may be. That is typically inevitable. But I believe right now that we are seeing this decoupling take place. And that is what Jack has hedged his bets
on the screen today, as you know. However,
so we're going to jump in his clip and the announcement that he made just recently. So the previous video was 3 days ago. Bitcoin was at 87K. As of this video, Bitcoin sitting around 94K. And then Jack made this announcement about 12 hours ago, my time. This will be a couple days later for you guys, but this is changing the game of how typical stock companies can allocate their capital and what that means for users or investors.
When did this idea come to be?
The founding story. So I co-founded the business with Tether. I would say I've known the Tether group for over a decade. There just weren't that many Bitcoiners around over 10 years ago. So we've done a lot of work together in El Salvador, et cetera. We've been so inspired by Michael Saylor and all of the public companies acquiring Bitcoin. But I would say over the last few years, that inspiration turned into what we thought was an opportunity and a hole in the market that we could deliver on, which is bringing blue chip credibility and startup upside. We feel like we can bring enough capital and be big enough to win. We're small enough to grow. And most importantly, a pure Bitcoin business. A lot of these companies, they're pivoting from a past operating business. They're rebranding, changing their name. They're maybe selling video games to buy Bitcoin or selling medical equipment to buy Bitcoin. Right. And we're a purpose-built Bitcoin company. We're going to build Bitcoin products, Bitcoin cash flow, and we're going to give Bitcoin per share growth to shareholders and be hopefully the best way for investors to get Bitcoin exposure in the public markets.
Jack, I think off camera, just before we started, you used the word vehicle, a vehicle for Bitcoin. I think like a reasonable question that people have is, what does the CEO of a new company whose mission is to accumulate Bitcoin do day to day? Like, what is it that you're going to try and manage or achieve?
Yeah, so for all the Bitcoiners out there, we encourage you to check out our filing. We've introduced two new metrics to the public markets. One is BPS, stands for Bitcoin per share, as opposed to earnings per share. And the other is BRR, which stands for Bitcoin return rate. And my job and what I'm dedicated to do for our shareholders, in which we view similar to our customers, is grow our Bitcoin per share. So we're an operating company. And when you buy a share of 21, in a hypothetical sense, what we intend to do is, let's say our Bitcoin per share is 0.05. Our intent is to be able to grow that to 0.06 Bitcoin per share, 0.07 Bitcoin per share. Where a vehicle like an ETF, your exposure is static. So 21 is an operating business, and we will be building Bitcoin products, Bitcoin operative cash flow, and then using the capital markets to accretively grow the Bitcoin on our balance sheet. So we want our shareholders to get wealthier, get richer in Bitcoin terms, and our metrics encourage the market to view us not in fiat terms, in Bitcoin terms, because we're not here to necessarily beat the market. We're here to build a new one and encourage the world to adopt Bitcoin in the sense that we believe it hasn't yet.
That is a huge fundamental shift. Like this company, so Jack Strike was built entirely on Bitcoin. He gets his paycheck in Bitcoin. Everything is done through Bitcoin. There is no fiat unless you're getting a loan. And now this 21 Capital is the same thing. And I think they are going to be the first company to, as he said, Bitcoin per share. And instead of you trying to evaluate the company in their fiat terms, it's literally going to all be in Bitcoin. And like he said, because he wants to shift the focus. So I believe at some stage, fiat will blow up and collapse as it always has. And like I've mentioned before, my tinfoil hat theory is that's where CBDCs come in, or a new world currency, global reserve currency. Something has to happen. But at the base layer will be Bitcoin and of course gold. And Bitcoin will surpass gold because it is that digital global scarce asset. Like it allows any country to participate in it, whereas gold, you just can't do that, right? So when that happens, you will no longer be trading your Bitcoin out to whatever fiat currency is available. You'll be making purchases in Bitcoin. Like that's the standard. I believe there will still be those global currencies around. The different world currencies aren't going to go away. Whatever major countries have currencies, they won't go away. They'll probably be consolidated. But at the same time, you'll be able to trade in Bitcoin as well. So you'll walk into your local store, same way it says Google Pay, Apple Pay, debit, credit, whatever. It's like Bitcoin will be one of those options. And that's just going to be the globally accepted exchange amount. And Bitcoin will be a lot less volatile at that stage. So he's building this company on those sound money principles. And then as you are investing in it, so you're giving him your fiat, and he's going to also be building products and services and making acquisitions and mergers and deals. And all of those will be denominated in Bitcoin. So as the company grows and matures, its goal is to capture more and more Bitcoin. Again, like I just feel we're not bullish enough, because if you have just a handful of these companies, your Michael Saylor strategy and now 21 Capital and GameStop doing something similar to strategy, if they're all accumulating Bitcoin and not selling it, there is just not enough to go around. Like there was never not enough to go around, period. But now when you have these behemoths just swallowing up larger and larger shares, it's like, yeah, you really have to double down and get in on this at this stage if you want to escape the fiat rat race.
Jack, you already have a Bitcoin product, and it's Strike.
Yes.
And it's where people can buy, sell, store their crypto. What happens to that? Are you still going to be leading that business?
Yeah, I'm the CEO of both companies. We're actually disclosing today at Strike some of our financials. So Strike, immensely profitable. We have over 20% EBITDA margin, 85% gross profit margin. We have only 75 employees. So on a gross or net profit per employee basis, we got to be one of, if not, the biggest in the Bitcoin space in that regard. And so it's an incredibly strong business. It's doing well. I'm so proud of the employees and our investors and thankful for our customers. And, Caroline, you can just do things. And I'm going to lead both businesses. I truly believe my purpose on this planet is to try and help Bitcoin have a chance to change the world in what I believe is the right direction. And I think Strike and 21 both independently work towards that.
Jack, you have plans to raise capital, and I guess not just like as a one-off, over time raise capital, right? How will that work in practice? What mechanisms will you use? And a lot of people that watch the show like ask if they're not registered institutional investors, like how can they participate in that?
Yes, I thought for a second you were going to offer me some money to buy some Bitcoin.
Absolutely not. Absolutely not.
I'm kidding, man.
Go with my actual question.
No, totally. So listen, we are hopeful to have our shares listed on a stock exchange under the ticker XXI. Today, we are trading under CEP, which Caroline mentioned is our Cantor Equity Partners, and that stock is trading in live today. If it's successfully merged upon closing, it will be XXI. We do intend to raise as much capital as we possibly can to acquire Bitcoin. Again, my one rule to my shareholders is it will be accretive. Our Bitcoin per share will grow. We will never have Bitcoin per share negative. At least that's our intent. Our intent is to make sure that when you're a shareholder of 21, that you're getting wealthier in Bitcoin terms. And that's my job as a CEO to deliver that. So we plan on raising capital in all different type of sectors and markets and really blending Bitcoin and incorporating it in the traditional financial system to deliver a powerful equity to the public markets for Bitcoiners.
Is that the selling point versus ETFs? Because you came up with this idea over the course of years. And since that time, there's not just been strategy that you can invest in or block, but you can get spot Bitcoin ETFs.
Yeah.
What's the upside? And in fact, a viewer from Bloomberg's asking, like, how can you have more bits than an ETF?
Right. Okay. So I got to be clear. I'm not preaching a future that I can promise. This is hypothetical and this is our intent. Somewhere my lawyers are like, that's our guy, right? But our intent, Caroline, is that when you buy a share of 21, and let's say that's 0.005 Bitcoin per share, we go out and we intend to close deals, build products, add Bitcoin to our treasury to where in which you get a press release and you say, wow, 21's Bitcoin per share grew from 0.05 to 0.06. I just got more Bitcoin exposure. I got wealthier in Bitcoin terms just by being a shareholder of this company. An ETF is not an operating company. IBIT isn't outgrowing your exposure to Bitcoin. It's a static exposure through their security instrument. Whereas for us, we're a business. I'm a CEO. Right. I get up, I work every day to grow how much Bitcoin your share represents on our balance sheet. That's the big difference.
Jack, when did this?
Again, I think that's just insane. It's never been done before. And if this is successful, it could usher in just other similar models from other companies, just like again, Strategy and GameStop and the ETFs. So there's so much available fiat to move around into Bitcoin from the traditional vehicles that are out there that have not touched this yet. So we just have so much more upside for Bitcoin. And the scary thing for me is that when it takes off, it's just like, you're going to be kicking yourself that you didn't get in sooner or buy more when you had the chance, because it's like Samson Mao said, we're going to have these Omega candles and there'll still be corrections, of course, but the corrections are going to be a lot less. There's going to be a lot less traders and more long-term hodlers like Jack and Strategy and people putting it on their balance sheet as a hedge and a safe haven to store their wealth. So if that's the case, then you're going to have less and less on exchanges moving around. Let's take a look at that real quick. Head over here to CoinGlass and take a look at this. So this is Bitcoin price is in green. What is that? That's the balance. Inflow, outflow. That's not what we want. We want Bitcoin balance. Oh, that is it. That's the price. Yeah. So we have gone up a little bit on exchanges. There was people, I think even BlackRock moved like 27K. That might be them right here that made this move. 2.26 million to, that's 2.18 to 2.26. So we're still down quite a bit. The all-time low was 2.15 million on the 5th of February. And typically, in case you're not familiar, what this means when Bitcoin moves on to exchanges, that means it's coming out of people's cold storage wallets. And typically you move it onto exchange to sell it. So if you see that ticking up quite a bit, then that means it's potentially being sold and put on the market. And then you could see Bitcoin price drop typically. But overall, when you zoom out, it's just a huge amount of Bitcoin being removed. So we're like 1 year later, we have removed 500,000 Bitcoin from the exchanges into cold storage or off somewhere else. So if that continues, a year from now, we'll be sitting at, 1.75 billion or so. And I think it'll actually get more aggressive as we go forward. But of course, that can always come back. But my thesis is that these companies that are adopting standards like Jack just showed you, it's not going to come back. They're keeping this forever. And also like the Bitcoin strategic reserve from the US government, the goal is to hold that for a long period of time and never sell it. So if nobody's selling, then how do you get access to it? And as Michael Saylor said, the only way is that the price has to drive up high enough to convince someone else to sell their Bitcoin. It's always going to be somebody to sell it. Just depends on at what price are they willing to walk away. And of course, some people are curing Bitcoin at 10K, 20K, and 100K is a nice amount for them to flip. My thesis now going forward, this is my retirement plan. So I don't actually want to sell it at all. I want to, invoke the Bitcoin adage, never sell your Bitcoin, and just continue to stack. And then instead take a loan out against it. So, all right, let me know what you guys think about Jack's new co-founded company, 21 Capital, and that of what he's doing. Think that's bullish? Are we bullish enough? Where do you see Bitcoin by the end of the year? All that jazz. Smash that HBO special, help brother out. Like, subscribe, comment down below. And until next time, lift daily and achieve your impossible. See ya.